Alright, let's get one thing straight. The world of trading can feel like a wild ride. The markets go up, they go down, and sometimes they spin you right around. It's a full-time job just to keep up, and let's be honest, you have a life to live. This is where a trading bot comes in. Think of it as your very own financial assistant, one that never sleeps, never gets tired, and never lets its emotions get the best of it. It works for you 24 hours a day, 7 days a week, executing trades based on rules you set. This is not about getting rich quick. This is about being smart with your money and your time. The biggest enemy of any investor is emotion. Fear makes you sell when you should hold. Greed makes you buy when you should be cautious. A trading bot doesn't have fear or greed. It operates purely on logic and data. You tell it the strategy, you set the parameters, and it follows those instructions to the letter. This discipline is what separates successful traders from those who lose their shirts. By taking the emotional roller coaster out of your investment decisions, you are already putting yourself on a much more stable and sensible path toward your financial goals. It is a powerful tool for maintaining a level head in a very chaotic environment. Now let's talk about speed and efficiency. In the trading world, a split second can mean the difference between a profit and a loss. By the time you see a market opportunity, log into your account, and place a trade, that opportunity might be gone. A trading bot, however, can react in milliseconds. It can analyze massive amounts of data from multiple sources at once, something no human brain could ever hope to do. This allows it to spot and act on opportunities far faster than you ever could on your own. It's like having a supercomputer dedicated to growing your money, working tirelessly in the background while you focus on your job, your family, and your life. So why do people use trading bots? The answer is simple. They want to be smarter, faster, and more disciplined with their money. They want to leverage technology to gain an edge in a competitive market. A bot can help you stick to your strategy, execute trades at the optimal moment, and manage your portfolio around the clock. It is a tool that, when used correctly and responsibly, can become an invaluable partner on your journey to financial security. But you must choose wisely, and you must understand what you are getting into. This is your money we are talking about, and you must be its strongest advocate. When you start shopping for a trading bot, you'll see a lot of flashy promises. Ignore the noise. You need to focus on the core features that will actually help you make smart, informed decisions. First and foremost, look for a bot that offers a wide range of pre-built strategies. As a beginner, you don't want to be building complex algorithms from scratch. A good bot will provide proven strategies like grid trading, dollar cost averaging, or rebalancing. This gives you a solid foundation to start from. You can learn how these strategies work and see which ones fit your risk tolerance before you even think about customizing anything. Next, you must insist on a feature called backtesting. This is non-negotiable. Backtesting allows you to test a trading strategy using historical market data. It shows you how your chosen strategy would have performed in the past, through bull markets, bear markets, and everything in between. This is your crystal ball. It helps you understand the potential risks and rewards of a strategy before you risk a single penny of your real money. A bot without a robust backtesting feature is a bot you should walk away from. It's like buying a car without being able to take it for a test drive. Denied. Another critical feature is compatibility with your preferred cryptocurrency exchanges. A trading bot is useless if it can't connect to the platform where you hold your assets. Make sure the bot you choose supports major, reputable exchanges like Coinbase, Binance, or Kraken. The more exchanges it supports, the more flexibility you have. This also speaks to the credibility and reliability of the bot's developers. They have taken the time to build secure and stable connections with the biggest players in the industry, which is a very good sign for you, the end user who needs that reliability. Finally, look for a bot with a clear and intuitive user interface. You should not need a degree in computer science to figure out how to set up a strategy or check your performance. The dashboard should be clean, easy to navigate, and provide you with all the essential information at a glance. Look for features like paper trading or a demo mode, which let you practice with virtual money. This is an excellent way to get comfortable with the platform and its features without any financial risk. A user-friendly bot empowers you to be in control, and when it comes to your money, you must always be in control. Once you know what features to look for, it's time to start comparing different trading bots. The first thing most people look at is the price, and for good reason. Bot pricing models can vary wildly. Some charge a flat monthly or annual subscription fee, others might take a small percentage of your trading profits. There are even some free bots out there, but you must be extra cautious with those. Often free comes with hidden costs like limited features, poor security, or a lack of customer support. You need to sit down and do the math. A high monthly fee might be worth it if the bot's features can genuinely help you generate more profit than a cheaper alternative. Beyond the price tag, you need to compare the features each bot offers. Make a checklist. Does bot A have the backtesting feature you need? Does bot B support the specific exchange you use? Does bot C offer the dollar-cost averaging strategy you want to try? Don't be swayed by a long list of fancy features you'll never use. Focus on the tools that align with your specific goals as a beginner. Sometimes a simpler, more focused bot is a much better choice than a complex one that overwhelms you with options. The goal is to find the bot that gives you the best value for your money, not the one with the most bells and whistles. Ease of use is another major point of comparison. A powerful bot is worthless if you can't figure out how to use it. Look for online reviews, watch video tutorials, and see if the company offers a free trial or a demo account. This hands-on experience is invaluable. Pay attention to how easy it is to set up a new strategy, monitor your active bots, and understand the performance reports. Is the customer support team responsive and helpful? A bot that is easy to use will give you the confidence to manage your investments effectively, while a confusing one will only lead to frustration and potential mistakes. Finally, you must compare the reputation and reliability of the companies behind the bots. How long have they been in business? Do they have a strong, active community of users? Search for independent reviews on sites like Trustpilot or Reddit. See what real users are saying about their experiences, both good and bad. A company with a long track record and positive community feedback is generally a safer bet than a brand new, unproven platform. This is your hard-earned money on the line. You have to do your homework and choose a partner you can trust for the long haul. I cannot say this strongly enough, your security is paramount. When you use a trading bot, you are giving it permission to access your exchange account and trade on your behalf. You must understand how this connection works and what steps to take to protect yourself. Reputable trading bots connect to your exchange account using something called an API key. Think of an API key as a limited power of attorney. It allows the bot to place trades for you, but it should never ever have the permission to withdraw your funds. When you create an API key on your exchange, you must ensure that the withdrawal permission is turned off. This is the single most important security step you can take. Next, you need to scrutinize the security practices of the bot provider itself. Do they use two-factor authentication or 2FA for logging into their platform? This adds an essential layer of security, making it much harder for an unauthorized person to access your bot's control panel. You should always enable 2FA on both your trading bot account and your exchange account. Also, look into the company's data protection policies. How do they secure your personal information and your API keys? A trustworthy company will be transparent about its security measures and will have a solid protocol in place to protect its users from cyber threats. Reliability is just as important as security. A bot that frequently crashes, goes offline, or executes trades incorrectly is not just an inconvenience, it's a financial liability. A glitch could cause you to miss a profitable trade or, even worse, enter into a losing one. Look for bots that have a proven track record of high uptime and stability. Again, this is where user reviews and community forums are your best friends. See what other traders are saying about the bot's performance during periods of high market volatility. A reliable bot will perform consistently, giving you peace of mind that your strategy is being executed as planned. In conclusion, choosing the right trading bot is a decision that requires careful thought and research. It begins with understanding why you need one, to trade with logic, not emotion. Then, you must identify the key features like backtesting and exchange compatibility. Compare your options based on price, features, and ease of use. But above all, prioritize your safety by choosing a secure and reliable platform, and by properly configuring your API keys. Take your time, do your due diligence, and select a bot that aligns with your personal financial goals. If you are smart, patient, and responsible, a trading bot can be a powerful ally on your path to financial freedom.